if you're watching the recorded version, it was held live on Wednesday, the 21st of Feb at 12:30 in the afternoon. So this is a webinar we do every week on a Wednesday lunchtime, and it splits down into two parts. First of all, we look at the markets, see what's going on with the major markets, indices, currencies, and commodities, gold and oil. And then halfway through, we'll do a little bit on strategy. And today we're going to talk about trading false breakouts. So where the market looks like it's going to go in one direction, but we reckon it isn't. It's easier said than done, I think. But in terms of risk rewards, I think it can be an interesting approach to setups over all sort of time frames. So we'll have a look at those as we go through today. But let's get cracking. So as usual, we're on the Aondo trading platform. This is Trade Hub. So Aondo may be better known for copy trading, social trading, but you can also do your own self-directed trading as well. So I thought let's start off with the US markets. Oh, why does it always do this every week? It never wants to. There we go. Maximize it. So it's been a really interesting month, hasn't it? Because we end. This is the Dow Jones index. So we ended last month pushing out to fresh all-time highs in the sort of 26,700 area, and then not even a week into this month, the market had traded as low as 23,115. So we've seen, a 3,000 point turnaround in the Dow. Lots of headlines about, is this the crash, blah, 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 blah. But we have seen the market recover since then. But I think, as I was saying last week, I think it's going to be a while until we see these old highs taken out. It would not surprise me in the slightest if what we've seen over the last 2 weeks is the theme for maybe a few more weeks of markets, where we just chop, wide sideways range, quite good for trading, not so good for an investor's point of view. Investors have been well rewarded over the years by buying and holding because the market's just gone up. But I think a lot of that sentiment will have been knocked out of them in the last couple of weeks or so. But I think it's interesting. It's an interesting market. It doesn't, I think, as we were saying last week, if we look at the Dow, even though it's a whole bucket load of volatility we've had, depending on where we draw a trend line, if we go to the dip after the US election, there you go, that trend is still up, and if we went back, I don't know how much data we've got on here, but let's say we go back, if we can go back to the financial crisis lows, can we go back that far? Yeah, there we go. So if we went back to the lows, 2009 lows it was for US markets, I think, yeah, March 2009. There we go. We're those trends are completely untroubled from back then. Even if the Dow dropped 5,000 points from where it is now, it'd be exciting, but it wouldn't change that. What's nearly, I suppose. Well, no, it's a 9-year trend, isn't it? In that market. So, but you can see also, I suppose, just how in the last couple of years it's got massively overextended from that trend line. So we are well overdue a correction. Maybe we've had it, and maybe we just have a load of chop now going on. I think clearly the big level to watch are these lows, in all markets, FTSE, DAX, S&P, NASDAQ, Dow, these lows in the on the 6th of Feb. I think that what will be interesting, if the markets sell off from here, how do they act down here? If these are strong lows, and they've done well, they were tested a couple of times, we'd expect the buyers to come back in and push the market back up. If we break through these lows, I think it could be a case of look out below, and we see the market really start to sell off again. So let's see what happens. But for me, at the moment, maybe chop is the name of the game from here. Let's just take it down to a shorter term chart, just to look at some stuff for today, because I think actually we're going to talk about false breakouts today, and there's maybe an example here of the sort of thing I'm talking about. I mean, we have seen the market's rallied. It has been selling off for the last couple of days. This evening, we've got the release of the Federal Reserve, the minutes from the last Federal Reserve meeting. So the last interest rate decision meeting, they're released tonight at 7 o'clock UK time. So that normally makes for a quiet afternoon across the board in markets, as everyone just waits to see what they look like. So maybe not much going on this afternoon. But the levels to watch, clearly these lows from back here, February the 15th, lows 24,790-ish, bigger support back here on the Dow, 24,250, that sort of area. But on the subject of false breakouts, the classic breakout trade, is when a market, if we have a look over here, it's not, it's a really short-term example, but the sort of thing I'm talking about, hits a level again, everything looks okay, and breaks. So we go with the breakout. Traditionally, breakouts can be the sign of a trend changing, but maybe the interesting way to trade a breakout, first of all, is to assume it's a false breakout, because of course you get loads of breakouts that never actually end up being breakouts, never actually end up going anywhere. So the sort of thing I'm talking about, and we'll find a few more examples today. If we were looking at the markets here-ish, February the 16th, so last Friday, we'd have this big level left on the Dow, 25,292. Let's call it 25,300. So 25,300 on the Dow was the level. The market has a little wobble through, has another wobble through, but really fails to hold. So if you were looking at it here, if you were going to treat this as a false breakout, there really is no way of knowing it's going to be false. You've just got to really go, I think, with what the price action is doing. But if we get a market that sort of dribbles through a level, but we don't really get any follow through, it can be a good trade in terms of risk reward. Because let's say we've seen it have a couple of goes and really go nowhere. So let's say we're going short here at 25,290. The obvious place to place our stop is above how far it got after the breakout. And because markets have been volatile, that's a bit of a distance away. That's 25,432 was the high. So let's say we put our stop at 25,450. We're going short at 25,290-ish. So we've got 160 points of risk, but if the market's going to retrace, we've got an awful lot of rewards. So it really is looking at the price action. Does it? So this was a big level, 25,290. The market had a go, but really didn't make much progress. So we don't know that it's going to be a false breakout, but it's a good trade in terms of risk reward. We'll have a look on the pound in a minute, and I think there's a couple of examples there. So like this afternoon, for example, the false breakout trade this afternoon, if we were looking for one to set up, for me, the obvious one is this low down here, that one I was talking about at 24,800-ish. If the market has a little dribble through the Dow through 24,800, but we don't get any follow through, we want to be a buyer with a stop loss under however low it got on what we think is the false break. So there's no magic formula for trading false breakouts, but it's just looking at these levels, looking at the price action, and see how the market trades from there. So let's I think we are just chop now for stock markets. Great, maybe for trading short-term trading, and other strategies designed to profit from sideways markets, but maybe a tougher time for investors. And really, the levels to watch are these old lows down here, the lows from earlier on in Feb. If they do get broken, I really do think it could be tin hat time again. But at the moment, they're big levels. They have held well. So that's the Dow. Let's take a look at the. Let's stick with stock markets as we're on stock markets. Let's take a look at the FTSE, FTSE 100. Here we go. So let's, again, I think, like I said last week, I never look at the FTSE during a week because there really isn't, unless you're trading it, of course, when you need to look at it, there's not much point, because it's just going to do what US markets doing. So it's US markets dictating what goes on in the world at the moment. And like the Dow, it sold off heavily, hit a level 69.30. It's rallied back 400 points in the last couple of days. Like the US markets, it sold off. So again, the FTSE even more so than the Dow, because of the effect of the pound on the FTSE. I think we're just going to see chop, from this market. Let's see. So I think it's just all eyes on the US. And the last one, the DAX, there we go. Same thing again, a bit more volatile, the DAX, obviously, but falls off a cliff, finds support, and that's it. We are where we are. So I think it's all about these US markets. So the Fed minutes are the big ones tonight. Let's take a look at pound US dollar. Let's take a look. This has gone. It's been, for this market, I think a bit of a boring week, but it doesn't change that bigger picture. Clearly, the big influence for the pound this year is what's going to happen with the Brexit negotiations. And I think the market is taking maybe a slightly more positive view than you might get from the media, you know, because we're seeing pound against, we'll look at euro sterling in a minute as well, because that's interesting. But we're seeing pound against the dollar still in that recovery that started actually the year September 2016 it started, something like that. And we're still in that recovery. Any major weakness, pound US dollar, I think looks like a buying opportunity, assuming the sort of the 133s hold. You know, that's the lows from end of last year, trend line support, all that sort of stuff. There's so much support. You know, we got support at 137.50, support at 134-ish, and then big support down at 133. I think we might struggle in the short term to get back up to these old highs unless we get some fantastic Brexit breakthrough. But you know, it seems pretty well supported, maybe a little bit boring over the last week. Let's take a look at the hourlies. I think it's been weak the last couple of days. I mean, okay, so on the false breakout thing, if you really wanted to, you could treat what's happening now in the pound as something of a false breakout. Okay, so let me just show you what I'm talking about. So if we picked the low from February the 20th, which is okay, yesterday. So yesterday's low, the market traded down to 139.30, 31-ish, and then rallied to 140.23-ish. So we saw a 90-point move off those lows yesterday. So it did end up being quite a pivotal low. This morning, we've blipped through. So the market's traded to 139.04. So it's dropped through that level by about 27 points. But we haven't really had any big follow through. Looking at the squiggles down here, for those of you who are fans of the old squiggles, we do have nearly an oversold RSI down here. So the aggressive trade, based off believing this is a false breakout, probably the what's the word I'm looking for? Disciplined thing to do is to wait for this hour's candle to finish. Let's just zoom in. So we're still in this hour here that's updating. Wait for this to finish. Assuming it doesn't take out the low, we'll go with the assumption this is a false break. So we'll be a buyer wherever it finishes up with a stop loss below that low. Okay, so whatever that low is, 39.04, I said, didn't I? 39.04 is the low. So let's say it ends this hour, which will be at 1 o'clock, at 139.32. So we're a buyer at 32, stop loss at 38.90. So we got 42 points of risk, but potentially a rally at least up to there, 100 points up, and maybe even a bit further. So it's interesting, you know, and this is, you know, we can look on daily charts as well. Clearly, look on, and you think the signals on daily charts as usual would be a bit more reliable, but this is the methodology behind trading a false breakout. So at the moment, I do think it's overdue a rally. You know, if I was a betting man, my money would be on it going back up to these highs before it goes down to these lows. You know, famous last words, because we had the market was in this corrective mode off those highs from the beginning of Feb. So the pound did drop from 142.75 as low as 137. So we did see a 500-point drop in the pound, broke the back of that. I think we were looking at this a week ago, weren't we? When I was saying we'd rather get a bit of a sell-off. We had a bit of a sell-off on US inflation numbers, I think, that weren't as good as expected or were different to expected. And then the market has rallied, broken out to these old levels up here. So at the moment, I do think that, you know, we'll be waiting for the buyers to come back in and push this thing up to 141.50. Let's see. Clearly, if we lose these old lows at 137.70, it doesn't look quite as bullish. But for me, you know, we've corrected. We've had a bit of a blip up, selling off. Bang. The next move may well be to test those highs up there. Let's see what happens. While we're on the subject of Brexit and all that nonsense, let's look at euro sterling, because it's really died euro sterling. In recent weeks, even months, it's really flat. So last year we saw the euro go in April from 80, so a euro being worth about 83p, 83.20, to August last year it being worth about 93. So we saw a big move in the euro against the pound, and last year was a good year for the euro anyway, you know, against the US dollar and stuff. And there was lots of excitement that the euro was going to continue higher. And I was reading and not everyone, but lots of analysts are still quite bullish on the euro this year against the pound. And I just wonder, have we seen it? Have we seen the big move in euro sterling? Because look how dull it's been since September. we've got, it's just stuck in a bit of a range. We've got a big floor again, sort of false breakouts here on the dailies. You can see that big floor at 87.20. So 87, let's say, is a floor, blips through, but then rallies back up. So 87 is the big level to watch. Rallies in the euro, despite all the Brexit uncertainty and all of that, are not lasting very long. So clearly, it's not going to stay in this tight range forever. And I do wonder if the surprise ends up being positive for the pounds. Let's say we have news that Brexit negotiations aren't really getting anywhere. Well, that's hardly news, is it? Because that's what we get every day. But let's say we do get some sort of breakthrough somewhere or some deal agreed. You'd expect that to be good for the pound. So again, if my money was, well, where's euro sterling going to be in 6 months' time? I'd be tempted to think more down here than back up there. But at the moment, it's just stuck in this boring sideways range. So if we trade down to the low 87s, it looks to be a buy. If we rally much above 89, it's a sell. It's an incredibly tight range, euro sterling, pretty dull. But it's got to break out at some point. Let's see what happens. Euro dollar's interesting, because we had, again, everyone is really negative on the US dollar this year. That I think we were saying last time around. Last year was the worst year for the US dollar since 2003. So it got clobbered all year. And it still seems to be the feeling this year that it's going to be another bad year for the euro, for the dollar, sorry. So the euro and the pound are going to do well. But I think if you ever watch the markets, it's when everybody thinks the market is going to go in one direction and it's a done deal, that's completely the time the market goes the other way. So I do wonder if maybe we could see a US dollar comeback this year. But anyway, what we saw last Friday, so this is a daily chart for euro dollar. This is interesting if you like a chart. So let's have a look. What we saw last Friday was an interesting move. It did actually. So these are the highs from January the 25th. So the highs for euro dollar, 25.38. It did break out during the day. So on Friday, it traded as high as 25.56. So it took that level out by 18 points. But it did end up being, topically enough, false breakout. Yeah, so the market pushed through. We had bearish engulfing on Fridays, how we ended up. There we go, let's zoom that in. Big move in the opposite direction on Friday, and this week, just look at it, it's back under pressure. So basically we've missed that move anyway, so there's no point in talking about it too much. But let's just take a look on the hourlies, how it looked from a false breakout point of view. Let's see if we could have traded that with our wonderful hindsight head on. There we go. So it pushes through, spends maybe an hour above it, and then starts selling off. So I suppose another way of trading the false breakouts, if it pushes through the level but then starts pushing back into the range, we could use that as our sell signal. So we had a good 1, 2, 3, 4 hours there where the market had broken out and then started selling back in. The aggressive trade, we go short at 125.29. We put a stop over those highs, whatever those highs were, 25.56. So we got to stop, I don't know, 40 points away, 40, 50 points away, and see how the trade pans out. And so far, it would have panned out pretty well because the market has just gone storming to the downside, which leaves us, though, with an interesting setup, for now. And with these Fed minutes coming out tonight, we could well see some volatility, obviously, at 7 o'clock this evening. I think it's going to, because the euro is still in an uptrend. Euro dollar is still positive despite it being under pressure this week. It's all still positive, and I think clearly we want to be watching these levels down here. So 121.65 to 122ish. So we're currently trading at 123. So there's maybe a bit more, definitely a bit more scope for the downside because it is still weak. It's making another low for the week so far. Down here on the RSI, we do have a bit of bullish divergence going on. So the market is slipping lower, but our RSI is making higher lows. So again, it does suggest that maybe we're getting near a base, but let's watch what happens down here. So I wouldn't be in a hurry to buy today until this Fed thing is out of the way. But let's see what happens Thursday, Friday this week. But you would expect, or I would expect, the buyers to come back in ahead of these levels. So it's interesting. It's interesting with that false break to new highs last week and the price under pressure this week, but big support coming up, blah, 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 blah. Let's see what happens. But it doesn't change going back to the bigger picture for euro dollar. It doesn't change that trend, which looks like that. Which looks all still positive, and any dips look to be buying opportunities. that's that. What else? What else do we do? We've done that. Let's take a look at gold and oil. I think let's just bring ourselves up to date on that, because again, I think there's been some really interesting moves. Let's take a look at spot gold. Here we go. So I think, what have we got on here? Let's is that a weekly chart? What am I looking at? It's a daily. It is a daily, isn't it? Let me change it to a weekly. I think gold's interesting this year, but it is interesting more from a longer term point of view than a short term point of view. And I think the interesting chart is this. So it's if you look at, you know, the highs from 2016 were 13.75 an ounce. The highs from 2017 were 13.57 an ounce. And so far this year, it's poked as high as 66. And again, end of last week, poked up to 62, 13.62. So it's a massive barrier for gold up here. So this whole 55 to 75 area, massive barrier for gold. So again, if you really were negative on the price of gold, and by definition positive on the US dollar, because if the dollar goes up, the price of gold goes down. It's up at these sort of levels is a good opportunity to sell. You know, a sort of more longer term position maybe, because by definition, if it takes out 13.75, it does start to look as if we're starting the next leg higher. So I think it's really interesting up here how you know, so many times in recent months, whenever we've pushed up here, it just can't. It doesn't stay there. You know, everyone gets nervous and starts bailing out, and we've seen it again over the last 4 weeks. So I think it's interesting up at these levels, but also on the downside, for the more shorter term person, 1300 has been, here we go, 1300 has been pretty good support going back to, is that 1300? Yeah, going back to the second week of Jan, sort of dibbling around 1300, sets the rally up to 1365, sells off, comes back again, 1306, beginning of Feb, rallies $60 or so, and then we're back down here again, 1328. So I think it's interesting to see what happens if we get maybe a bit more pressure from here. Do we see buyers coming back in ahead of 1300 and maybe yet another go at those sort of last year and the year before highs? So it's a bit rangy, obviously, but I think some really clear levels to watch, like the euro, and maybe not surprising, we are seeing a bit of that bullish divergence thing on gold, where the market slipped to a low, slips lower still, but the price of gold, the RSI, sorry, is ticking up. So we've got higher lows on the RSI, and but lower lows in the price. So again, suggesting that maybe we should be getting near a base. Okay, so that's that. Let's what we can look at next. Crude oil. Crude oil. Is that the right contract? Let's have a look. Crude oil. There we go. Let's just flip it to a daily. Yeah, I think it is interesting because we are seeing, I think, some of these trends not being tested, but maybe giving opportunities to get into them. You know, the price of oil has been in this trend now since June, when it was about $42 a barrel. Touched 66, sold off. As we'd expect, though, the buyers have come back in, and the big levels for oil are sort of back down here, back these sort of levels, sort of 55, 50, 56, this sort of area. But I think, again, for shorter term traders, look what happened last week. You know, I know I always bang on in these webinars about big levels, but look how important 58-ish, 57.90, 58 ended up being. So the market on February the 9th trades as low as 57.90. There was no way of knowing it was going to stop there, but February the 13th comes back down to 58.24, so within 30 points. So that was the 13th of Feb. February the 14th, Valentine's Day present, again back down to that same level, trades as low as 58.10, and then gets a move on and rallies $3 or $4 from there. So if we were watching it here, you know, the main trend is up, blah, 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 blah. We've seen this support tested. It's a good low risk opportunity. At the moment, it's almost in the middle of nowhere. I suppose an aggressive trade could be to be a buyer wherever it is now, 61.41, with a stop loss under this low here, 60.76 could be one. But I think maybe the bigger opportunity is if it sells off again towards those low 58s, watch for the buyers coming back in. But again, just keep an eye on that bigger picture. And I think the bigger picture, even though the price has come off $8-ish since those January highs, the bigger picture is still very positive. I think for the price of oil, it still seems to be pretty strong. We'll start wrapping things up there, but let's take one last look at that pound US dollar thingamajiggy trade, just to see how that potential false breakout thing I was talking about is working out. Let's look at it on a 10-minute chart. All right, it's still pretty much where it was. So the idea is, what's the date today? It's the yesterday's low thing. Let me get rid of these crosshairs. So it's the move through yesterday's low, where we haven't seen any follow through. So yesterday's low was 39.30. The market's been to 39.04. It's still holding above it. So if we were looking at it on an hourly chart, what we might want to do is just wait for confirmation that it doesn't move below that yesterday's low. But that's an interesting one to watch. But I think it'll be a quiet afternoon, because we do have these Fed minutes coming out this evening. So I think still big markets to watch. Currencies, FX tonight, euro and pound. How do they react to the Fed minutes? Is there any surprises in there? But stock markets, I think, is still maybe one of the more interesting ones at the moment, given the volatility we saw in the beginning of the month, and just how they perform from here. Do they continue to hold above those lows that they set after the big plunge? I think those are the interesting ones to keep an eye on. Right, we'll wrap things up a little bit earlier than usual. But any questions, drop me an email. So my email address is david@tradeafter.com. You can follow me on Twitter. I did go through a stage of tweeting a bit more. I need to do a bit more again. But Twitter is @JonesTheMarkets. There'll be a recording of this available in about half an hour. If there's any bits you missed or you want to go through, really want to go through and sit through it all again, it'll be there. But thanks for coming, and we'll do it all again next Wednesday lunchtime.